All right, let's break down the latest earnings from Sprinklr, ticker CXM. This was a really critical report for the customer experience software company. Investors were watching this one super closely to see if the company's big turnaround story was actually starting to take hold. So let's get right into it.
Right off the bat, the headline numbers looked great. Sprinklr delivered what Wall Street calls a beat and raise, and that's exactly what you want to see. They topped expectations on both the top and bottom lines. Revenue came in at over $219 million, smashing the consensus of around $211 million. And their earnings per share, 12 cents, which easily beat the 9 cents analysts were looking for. And get this is the fourth straight quarter they've pulled off this kind of beat.
And, as you'd expect, the market absolutely loved to see it. The stock shot up more than 7% in pre-market trading as soon as the news hit. Investors clearly took this as a huge sign that, this company is finally moving in the right direction.
So the big question is, how do they pull it off? Well, the story here isn't just about one good quarter. It's really about a company that's in the middle of a major transformation. They are focusing like a laser on operational discipline to build a much stronger foundation for the future. And you don't have to take my word for it. The CEO, Rory Read, basically said it himself on the earnings call. He framed this whole year as a transitional one. So this quarter's success, it isn't some random fluke. It's a massive milestone in a very deliberate plan, and it's proof that their strategy is really starting to work. So what's actually driving this turnaround? Well, it boils down to 4 key things. First up, disciplined cost control, which is leading to much better profitability. Then you've got new leadership, a new CFO and a new chief product officer, who are sharpening the company's execution. Third, and this one's interesting, is an initiative they call Project Bear Hug, which is all about getting super close to their top customers. And finally, they are leaning hard into their AI capabilities, positioning themselves as the AI native platform for big companies. If you ask me, the real hero metric this quarter was profitability. Just look at this. Their operating margin jumped 4 full percentage points from last year, from 11% all the way up to 15%. I mean, that's huge. It shows the company isn't just growing, it's getting way more efficient and profitable as it does. Okay, before we go any further, let's quickly define a key term you need to know, RPO, which stands for Remaining Performance Obligations. The easiest way to think of it is this. It's the total value of all the contracts they've signed but haven't billed for yet. For a company like Sprinklr, it's a super important clue about future growth. And this is where the story gets a little more complicated. While that profitability was a massive win, the growth picture is still a work in progress. Subscription revenue grew just 5%. And more importantly, that total RPO number we just talked about was actually down 5% from last year, which could signal some headwinds down the road. The one silver lining is that current RPO, which is the stuff due in the next year, was up a bit, hinting that things might be stabilizing in the short term. All right, so let's get back to the good news and talk about the raise part of that beat and raise. Management didn't just deliver a solid quarter, they also showed a ton of confidence about the future by boosting their financial guidance. For the next quarter, Q4, Sprinklr is now guiding for revenue around $217 million, well ahead of what the street was expecting. They also guided earnings up to 9 or 10 cents a share, again, beating expectations. When a management team does this, they're sending a very clear signal to investors that they think these improvements are the real deal and are here to stay. Okay, so let's zoom out for a second. A single earnings report never tells the whole story. It's great to have a good quarter, but you also have to look at the neighborhood you're living in. So where does Sprinklr really stand? And this chart is really the key context, right? Despite this fantastic report, Sprinklr stock is still down over 13% in the past year. Meanwhile, a broad software ETF, a good proxy for its competitors, is basically flat. So this quarter was a definite win. But man, they are still digging out of a pretty deep hole of underperformance. So we've got the good, we've got the not so good. Where does that leave us? Let's get to our final analysis. We'll lay out the bull case, the bear case, and then give you our official rating on the stock. So here's the million-dollar question for any investor looking at these results. After such a strong beat and raise, is now finally the time to buy Sprinklr? On the one hand, the bull case is pretty compelling. The company is executing beautifully on profits, management is confident, the new leadership seems to be making a difference, and their AI platform is legit. But then you have the bear case, and it's got some real teeth. That slow 5% subscription growth is a concern, and the drop in RPO is a potential red flag for the future. Plus, you just can't ignore the stock's ugly history or the fierce competition out there.
So what does Sprinklr need to do to really win over the skeptics and get that stock price moving higher for good? It really comes down to a few key things. First, prove these margin gains are durable. Second, get that growth rate back up into the high single digits. Third, that RPO number has to stop shrinking and start growing again. And finally, they've got to show a clear return on their new leadership and all that focus on AI.
So, taking all of this into account, our official rating on Sprinklr is a market perform. Look, the operational turnaround is absolutely real, and management deserves a ton of credit for it. But the uncertainty around when, or even if, that top-line growth can really get going again is what keeps us on the sidelines for now.
To sum it all up, here's how we see it. The turnaround is passing its early tests with flying colors. Management has totally aced the execution and profitability part. But the final exam on growth is still to come. And really, that's going to be the ultimate test of this entire transformation.
And as always, just a quick reminder, this is not financial advice. Our analysis is for informational purposes only. Thanks for tuning in.